Equity markets reached the highest level since the summer of 2008 in February and remained largely resilient to the considerable bout of negative news flow during the month, particularly given the escalation of events in the Middle East and North Africa, which resulted in much higher oil prices. Oil prices in London have increased from $80 per barrel last September to the peak of $118 per barrel, increasing from $101 per barrel in February alone. The move in February is concerning for investors as it's driven by worries that oil supplies may be hampered, while prior to that oil had moved higher on expectations of increased demand due to the improved economic outlook. Merger and acquisition activity has also been supporting the equity market rally, as it was reported that deal volumes so far this year have topped 99 billion, higher than any year-to-date period since 2000. This reflects that it is now cheap for companies to raise money in the corporate bond markets to purchase other companies. Elsewhere, it is also worth noting that investor flows continue to point to an increased appetite for developed market equities at the expense of government bonds, cash and emerging market equities. The fourth quarter earnings season intensified in Europe, where earnings have come in ahead of expectations on the back of much stronger revenue growth. Revenues have showed the strongest growth in almost 5 years, although margin pressure was evident as companies reported margins that were shy of expectations. The pressure on margins was particularly evident for the consumer discretionary, materials and consumer staples sectors. US earnings have been better than Europe, but pressure on margins have also been evident. Emerging market equities continued to underperform in February. Continued concerns that the region will require tighter monetary policy to offset inflationary pressures weighed on equity markets. China raised rates further in February as inflation there moved back up to 4.9% in January after easing slightly in December. Commodities traded 3% higher in February, helped by the energy and precious metal sectors, as the geopolitical events in the Middle East resulted in higher oil prices, prompting a flight to quality, which boosted the precious metal sector. In contrast, industrial metals, which made gains in February, underperformed on fears that the higher oil price may hamper economic activity and hence the demand for these commodities. Agricultural and livestock also lagged.